to the angle, no time to delay. Markets rise and markets fall. Atomcash is ready to answer the call, while the bulls charge hard and the bears dig deep. The angle will keep you on your feet. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel to run with a fire that never dies. Hold on tight, the stage is set. Dig in deep with no regrets. Red and green bars leading the way. Welcome to the angle, no time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. This is the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Adam Cash, and I'm bringing you the firepower that your financial life may have been missing. Now, whether you're new to trading or a trading savant, I aim to turn complexity into clarity with a shot of adrenaline. Now, today we got an exhilarating lineup of segments to give you all as much information as quickly as possible as per usual. Now we're going to go through the market and look at some live market analysis, potentially find a live trade or two that we could do live like we did yesterday. Basically that overtook the entire show, so we might do some of that today. But I also have the heat check segment kind of set up on the back burner. We'll see, like I said yesterday, I asked you guys who watched the show yesterday, kind of prioritizing how the market's trading right now, and as we get a little bit more volatility, there's more things to talk about, so we may not lean into segments so heavily, at least at this point in time, or at least this juncture, since there's so much to talk about with being in the midst of earnings seasons where volatility sitting and everything. So we may focus on the market more than we normally do instead of specific names of stocks, but if time allows, we'll be more than happy to roll some of that into the show later on in the day. As per usual, we're going to go over our catalyst watch for this morning and see what we have coming down the pike as potential catalysts. Now, we did have Trump speaking on CNBC earlier this morning. We also had a few earnings calls this morning, as I alluded to yesterday. You did have the McDonald's earning call, Disney, and Uber. Those were like the big ones to keep an eye on. We also saw mortgage rates come in a little bit lower than anticipated, which was nice. For those of you in that kind of space, great for you. We also have some Fed speakers speaking later on today, and the 10-year the 10-year note at 1 o'clock today, so that should cause a little bit of bump in the market, so you're going to want to watch out for that. Fed Cook and Collins both speaking at 2 o'clock today, and you have Daly speaking right after close, so we don't have to worry about that. However, there is something you want to keep an eye on, and you saw Apple get a nice pop here in the pre-market, and that's due to some news with Apple as it pertains to what was mentioned this morning, pre-market. Hassett said that an Apple announcement was likely to come today about a new factory. And tying into that, why I'm mentioning it, Trump has the Apple investment announcement today at 4:30. You're probably going to see a lot of FOMO flow into Apple today, which is why I wore my shirt. I wore this Green Day shirt, because last time we did a stream and I wore a Green Day shirt, the market ended up going down because my shirt said Green Day and the market went down. But maybe things will change if the market gets a little bit of FOMO into Apple into the open here. You got a nice 1.5% pop here on Apple. That doesn't necessarily get out of the woods by any means, as we talked about yesterday, how this low is very important, but you could see some FOMO buying today. Watch it stay south, more than likely, basically where it is. Watch that pre-market high. Staying under that pre-market high is more than likely going to be where it sits today, unless the bulls come out of the gate in the first 5 to 10 minutes and really try to push it here and break over the 50 MA on the daily. Now let's take a look at the SPY. Yesterday we saw how volatility worked hand in hand with the overall market. And I mentioned yesterday before I went off stream, when we were somewhere around here-ish, right, 10:45, 10:50-ish, that I expected volatility to swing back the other way and the market to go to the upside as a result. Now we got volatility. So here's my VIX. We'll zoom out a little bit. Here's your 5-minute. Right, this is yesterday. So here, that big move up. And volatility did come down as I anticipated. We basically sold off on volatility, if you want to call it selling off, on volatility for the rest of the day and had a little bit of a bounce back around that key level like we talked about, 1775. Conversely, the market did grind back to the upside, however, didn't come up as much as I anticipated. Now, I did say basically I wanted to see somewhat of a U-shape on the market, where we all, as you saw in the program yesterday, caught that downside move pretty nicely, but I was anticipating some level of a reversion to the upside, which we did get, to be fair, but the bulls did not really follow through, and we actually sold off into the close. So we did have a decently bearish close, closed more bearishly, especially if we're looking here on the daily chart on the market. Get my doodles out of the way so you guys can see. Not the worst candle in the world, but not the best. Bouncing off the 21 EMA on the daily chart, filled the gap as we already talked about yesterday, and kind of sitting in a questionable spot, up a little bit here in the pre-market, about $1.50 and change. The weekly is still looking a little tentative here, and the monthly, like I said, I do think we're in for a red month as a whole for August. As I put out that video, and I'll plug it again because I know not everyone watches these every single day, but I put the most recent video I put up on my YouTube channel. Go take a watch on that. It's basically highlighting a once in a 2 to 5 year opportunity that could be presented to us here in the interim, basically between now and mid-September, if what I see happens, essentially. So we'll take a peek at that, and we can talk about that a little bit more later as it becomes more relevant. Looking at the Qs, up a little bit. This is mostly carried by Apple, I would say, in the pre-market, because as you can just look down here and see, definitely leading very strongly. You want to keep an eye on NVIDIA today as a whole, mainly due to the fact of Trump mentioning how we're going to have some tariffs regarding semiconductors and regarding pharma. Obviously, NVIDIA will bear the burden of that. I mentioned yesterday that I did anticipate NVIDIA to come down to at least 174, 175 pre-ER, and ER is not until the 27th. Yesterday, we basically filled that need, and pre-market here basically filled that need. I do think we see a little bit more downside here on NVIDIA. Near term, definitely under 175 to 170. If it fails 170, let's get some of my doodles on here again, more than likely going to come back to that old all-time high of 153.13. So I would prefer to get a sell-off, a cool down, so to speak, into earnings that are coming up on the 27th. You got plenty of time for that move too, so that gives time for that move to slowly come down and reposition. It gives time for the bulls to cool off here as well. It gives time for the weekly to reset a little bit, even the monthly to reset a little bit, especially if earnings are good, which I anticipate them to be good based off what we saw with AMD. AMD's earnings weren't necessarily bad, but they basically show how even though AMD and NVIDIA are both semiconductor companies, they are worlds apart in terms of profitability. Let me phrase it differently. They are worlds apart in terms of what they're able to do, I guess you could say. And NVIDIA surpasses AMD by a large margin. And I think we'll see another blowout earnings for NVIDIA, which is crazy to say, especially at its current evaluation. But keep in mind, just because they may have a really good earnings, when you're at this kind of evaluation, that growth has to be strong. It's got to be high. It's got to be really fervent, right? It's got to be frothy, right? Market's got to get excited about the growth and be blown away by its expectations, and hitting expectations. And that's crazy to say, but even just hitting expectations could lead to NVIDIA getting a bad earnings move. Again, not necessarily that the earnings are bad, but the reaction of the earnings may be poor. So that's something we'll talk about as we get closer to that time. Negum says, good morning, make me some money today. Yeah, well, if we can, we will. You make yourself your money, my friend. you point, you pull the trigger. I just tell you essentially where to aim and shoot potentially, and you decide if you want to shoot or not. Meta right now up a little bit in the pre-market, about 0.5% here. Again, south at 775, 777 area. We'll lean a little bit more bearish here. If it didn't break over this, and I mentioned this yesterday, how this was actually a strong catalyst for my downside trade on the Qs yesterday. If it can't break this localized high here, this all-time high, I should say, sooner than later, more than likely going to fill this gap. So just be a little cautious if you're a long Meta investor. Keep a tight eye on it. It's not bearish yet. Once that 8 EMA catches up, that's where you're really going to want to wait to see. Currently, that 8 EMA on the daily is at 744.20. So it's going to catch up to this price action. Watch for the reaction there. If you want to see a trend continuation, we want to bounce off that and push to the upside, then break this high. If we fail there, then there could be a good probability of filling that gap to the downside. Microsoft, as you guys know, I'm still stuck in, I guess. I mean, they're essentially worthless as it sits right now, but I still have my my bear spread position on Microsoft that expires in, what's that, 8 days, 9 days? Next Friday. So we will see if I can get any blood out of that stone. If it does break under basically 559, could get more of a starker drawdown here. Price action's getting a lot wider on it, so it's not impossible. And lately, if you've been looking at it, especially on the 5-minute chart, it's just sucking eggs. It's sucking wind, whatever you want to say. It's not having a fun time, with the exception of this day here. It just plodding, moving down. It looks like people are taking profits and possibly shorting. I'll have to check later. But it's looking like people are taking a lot of profit on Microsoft up here, so you want to be cautious of that. Google, again, as a reminder, this is my barometer for strength in the Mag 7. It's got to break 197 with strength. Yesterday was a third test of that general area with a harsh rejection on this wick, basically closing on the 786 retracement here on Google. So this is an interesting spot to watch. Your daily MACD is flipping bearish. You still have decent bull momentum, though, to be fair. On the RSI, these weekly candles are ugly. I think we're due for a retracement to the GP. It's still, again, I would say the most bullish Mag 7 name if you want the opportunity to make money. But I think we're due for a retracement to the GP down here. 185.36 to 187.16, especially after this third fail, unless we get it today. But especially if we backtest it again today at 127 and reject. Here, I'll make a deal with you. If we tap 197 today and reject it, I will personally go short Google. So, but I think what's in the cards near term, especially through August through September, is at least back testing this general area, specifically my 185.80 LOI here, cooling off a bit. So it gives you about 9 points of downside. It's not like the end of the world by any means, but getting some level of a healthier retracement before getting a larger move here, especially on the weekly. Big, pretty solid move here. Allows everything to cool off, catch up, and so on. So that would be what I'd look for here on Google in the near term. Tesla, don't touch it. I'll continue to tell you, don't touch it. The time to touch it, if you want to long it, down here, 212.64 to 220-ish. It's going to be the area in which I'd probably start longing. When your EMAs are all tight like this and you don't really have clear technical basis here, it's a risky trade either which way. And premiums on Tesla, as you guys know, are very expensive. So unless you're intraday trading, I just wouldn't mess with it, in my opinion. And Amazon, not looking the greatest. If you fail this 210.88 area, you're more than likely going to get a drawdown to this cluster down here in the low 200s, high 90s. So watch that. You also have the 200 MA down here right at 209.82. So keep that on your radar. All right, market's going to open up here in just a few moments. Let's hone in and lock in on the market. But guys, we have 20 seconds till the market opens. So I'm going to give you guys a quick plug, and you're probably hearing this after the market opens. But either way, do me a quick favor, whether you're watching anywhere in the universe, whether on YouTube, X, Instagram, Kick, Twitch, wherever. Do me a favor and like, interact with the stream, drop a comment, say hi, follow me, subscribe, whatever it may be. And don't forget, if you like the content here and you want to see more of the content, pop over to my YouTube channel, hit the subscribe button. And once we get to 500 subscribers, this will be an every single day show. That's my first cheap plug. We do 2 a stream, and that's how we're going to do it right now. Okay, market's open. And the market's open pretty flat right now. Up about $1 from yesterday's close. So we'll see how things react into the open here. Again, watch Apple specifically at basically pre-market highs. I don't anticipate Apple to get strength over the pre-market highs unless we have full-blown FOMO into the after-hours expected news event, which will more than likely be a nothing burger in my opinion, but we will see. Conversely, Nvidia down 1% here at the open, wicking up and moving down. So that's an interesting little dichotomy we're seeing here between the two. Me being quiet because I actually might take a short on Apple because I really don't like the daily chart, and this might be a lot of hype. Hype. But to be fair, the hype could continue and the hype could push it. So it would be a little risky. I'll probably wait here a few minutes and see if there's an opportunity there. Yep, we broke pre-market high. So at this point, I want to wait and see if the bulls can step in here over the pre-market high. We'll go from there, I guess. Reevaluate, see if there's an opportunity to get a short off of Apple here today. I know shorting the strength seems crazy, but now to be fair, like I said, above this area, which I don't really anticipate to hold, you're above the 50 MA. You actually opened like on the 50 MA, and we're hitting a decent cluster of resistance around here on Apple. Actually, I'm gonna put my money where my mouth is. I'm looking at the 205 puts on Apple. All right, I'm gonna grab some 205 puts on Apple. Grab a few more. And a few more. Okay. I am now long the 205 puts on Apple at a 132 average. So that's this week, 205 puts on Apple at a 132 average. So basically looking for this 207.5 area, which we're breaking above, but at least looking for that to come back and retrace. This is a stark move up pretty quickly as well. So I'll add this to the watch list. I know, again, seems ballsy, seems scary to buy puts on a healthy pop here with good volume, but I'm thinking we're going to see a lot of FOMO come in. It's got to cool off, and more than likely, mainly because we're hitting in this daily area here, is decent amount of resistance. 208.85 is probably where I'm looking to risk here, and if we fail 207.50-ish, let's see, 207, basically 207.50, 207.68-ish area. More than likely going to get a quicker reversal to the downside here. So, and these are weekly contracts. It's not like it's a 0 DTE, so I have a little bit of flexibility here on this one. But it's looking like you're getting a little bit of FOMO into Apple here, which will work out well for me as a bear if it goes the way I think it's going to go. All right, looking at the market right now, we'll come back to Apple. I have the contract up here on the watch list so you guys can see. Again, my average on that play is a 132 average, currently sitting at 124. I'll keep it right up here so you guys can see no matter what we do. All right, look at the market. Still pretty flat on the open here. Q's pushing up again. This is mostly fueled by Apple, but looking at the rest of the Mag 7, not pretty flat. I was going to say not super strong, not super bad, but pretty flat. Something to be mindful of. Our volatility right now is pretty flat around that 1775 area, around this 1575 conversely on UVXY, 1575 to 16, so I've got the even conversion there roughly, sitting around that important area. Remember, if we're over 1775, the market gets more aggressive. It doesn't necessarily get more bearish, it's more volatile, so keep that in the back of your head as we trade the day. All right, those Apple contracts are basically back at cost right now, trading at 136. We'll keep an eye on Apple here momentarily. I'm looking for a back test of 207.50, 207.68, which is looking like what we're going to get here momentarily. At that point, these contracts should be up about like 10 or 20 bucks or so nothing too crazy. But if we can get a follow through on that move, more than likely going to go back to open and kind of see where we go from there. So we'll be patient on that for now. Apple SPY is underneath this key LOI here, so it's 629.47. It's not having an easy time pushing over it though. Now it is pretty early into the day. We're only 4 minutes into the open, so obviously that can change as time goes on here. And if I had to say, the market actually looks positioned to go more green for now than red, but volatility's got to play ball. And I don't like that Apple is carrying a lot of the tonnage, a lot of the weight to keep the market, or try to keep the market green at this point in time. Also, a red IWM does make me a little trepidatious, although IWM was more defensive yesterday, or I shouldn't say more resilient yesterday than it was bearish compared to our other indexes. We'll look at the sectors here as well. Let's see what's looking good, looking bad here. All right, mixed bag on our defense. We have utilities red right now, energy green, and staples pretty much flat. Tech is up. Again, this is mostly perpetuated by Apple, and a few of the Mag 7s are moving up marginally, so it's not necessarily hurting. Nvidia had that a little bit of a rough open, but it's looking like it's calming down a bit. Real estate's pretty flat off the back of that mortgage news, and basically nothing burger. Rates were a little bit better than anticipated. Materials pretty flat. Industrial selling off on the open. Keep an eye on this today. See if we get under 0.5% and kind of reevaluate. Healthcare getting a pullback as well at 0.7% here in the open. Banks pretty flat off the open, up about 0.3% on the gap up. Consumer discretionary pushing to the upside. So again, mostly your Tesla, your Amazon, as I always like to say. And comm services pretty flat. So a little bit of a mixed bag. We're not seeing a ton of strength come through anywhere with the exception of energy. Pretty stark outlier here. And utilities, ironically, the defensive sector, or two defensive sectors, outperforming and underperforming at the same time, which is interesting to see. And of note, the XLE gapped up, but it's still trading sideways essentially as it stands right now. Meanwhile, the XLU opened flat and sold off. So something, I'm sure a company reported earnings that's a big holding in the XLU and selling off right now. It's more than likely what's perpetuating a deeper pull here on the XLU. Let's pop back over to Apple. Sitting on our POC here, so that's the point of control where the most volume is traded on the day thus far, right around 208.34. So we'll see if the bears or if the bulls can hold it together. Watch your 8 EMA catch up here and see how we react if these two intersect. Kind of go from there. SPY not looking too strong. Q's rejecting decently here as well at the 200 MA, also the low a day. Watch your 560.80 LOI. Basically wicked that at open, had a nice little rally, so watch that for additional potential weakness. Basically the same chart, and this is rare. Oh no, I lied. I was going to say, same chart on the Q's as it is on IWM, but it's not. IWM and SPY are looking very similar today, so small caps not finding a lot of strength today. Okay, VIX is at 1775, guys. We talked about this yesterday. You saw this work in real time yesterday. And ironically, we have a lot working at the same time as we're testing that VIX 1775 with this Q support here and sub this SPY LOI. So we're at an interesting spot where SPY could push down easily on that break and break through the 627.86 area as well if volatility can sustain and substantiate a level north of 1775. Apple kind of holding the highs here. I am a little underwater on the bear position right now, but that's okay. Our 8 EMA is caught up to our POC here, and you're starting to do, like I like to say, a bit of a rounding effect. Now, bulls can step in still. I'm not saying you can't, but once you see these wicks here, wick, and I could have been more patient, like I said, could have, but I didn't. But once you start seeing these wicks develop, that's indicative of people selling, people getting out of the way, taking profit, whatever you want to say, shorting. Price is moving, right? Because price is continuously selling under this general area right around like 209. So if the bears and if the sellers in general continue to substantiate under this 209, you're going to break this POC. You're going to back test that 207.68, 207.5 area. And that's the point in time where if the bulls don't step in, it will get yoinked back to the open. I'm very confident of it. Especially if we see the VIX continue to sustain over 1775, currently 1780. So you're not out of the woods here on the VIX if you're a bear or playing volatility to hopefully support a bear position in this scenario. You're not out of the woods here, but it's looking like the bears or the volatility bulls, I should say, are pushing for a move here on the VIX as SPY breaks the low. And as Q's back test the 560.80. Now today, if I had to short an index, I would actually probably choose to short SPY versus the Q's. And here's why. So SPY is going to have more exposure, obviously, to other companies, not just tech. Tech's a big part of SPY. It's whatever, 20-30% of it, essentially. Whatever it is, a big portion of the Mag 7 are makeup, SPY's makeup. But the rest of the index are the other, whatever it is, 493 companies, right? So I like to use IWM as a barometer for how those other companies are performing. You can also use, I think it's ticker RSM or something like that. It's another ticker that gives you the equal weight SPY. But I would like to use this as a barometer or an idea of how the rest of the market is moving without tech. You can also look at just sectors in general And that's why I like a bear position on SPY if I had to take a bear position on an index over the Qs, because right now, especially with where Apple's sitting, the bulls are trying to play defense or be bullish on Apple today, especially with that news coming after hours. So if there is strength to be found today, it's probably going to be found in Apple. However, if the FOMO buyers get chased out, then there could be a deeper pull on Apple, which is only going to benefit you if you're short the SPY, right? So we're already seeing weakness across the market today. But if there is strength to be found, it's probably going to be found through Apple and through tech. However, if I was to take a bear position, more than likely would be on the SPY, just so I can have more exposure to general weakness versus having more succinct exposure to just tech, which is comparatively stronger, if that makes sense. VIX is now above its close at 1787. If you want to be a volatility bull, you can look for an 1808 break for a confirmation of being over that 1775. So I'll give you more of a clean break on volatility. You can also watch 16, even number here on UVXY. UVXY obviously has options exposure, so that's going to help you get a little delta hedging there on those weekly contracts for UVXY. Apple is near the high here around that 209 area where we're seeing wick. So bulls are going to want to push it here. We saw that AEMA catch up. So if I'm a bull right now, I need to see this break, and it needs to go sooner than later. You got a 13K wall on the level 2 at 209 that just broke. So bulls are going to try to push up on Apple a little bit more, perhaps. I can give a little bit more rope to these. 209.50-ish. I just don't buy the upward thrust here unless people are now fleeing to Apple as a means of defense. So I'll be patient on this one, and if it's a loss, it's a loss, but I don't think it will be for what it's worth. Let's look around again. Nvidia sold off to start the day, pushed back up, reject back down, and pretty flat on the day. Meta selling off the open. Microsoft still in the corner eating glue. Google, again, if Google taps that 197 level, again, that's going to be where I'm going to take a short position on Google, more than likely via a spread, just to offload some risk there, because I don't like swinging a bear position ever. So if I am going to take a swing bear position, it will be through a spread, so I can de-risk a bit. Tesla pushing up, and I'm sure Amazon. Oh, I was going to say, I thought Amazon would be pushing up. No, Amazon's grinding to the downside here. Tesla's having a decent day, though. Wow, Apple is just kind of squeezing a little bit of squeezy squeeze here. I will give it a time leash, essentially. Because right around here is where it should start to reject. I mean, it really should have rejected about $1 ago, but the bulls broke it there on that candle. I don't think it has much gas in the tank here. Good volume, though, on this candle, to be fair to the bulls here at the 943. Decent volume here. You're up 3.5% on rumors that are going to happen after hours today. I don't buy it. And I'm near the money, or relatively near the money, so I'm not sweating it too hard. I will look to take a short on the market, though. Potentially. I don't think today we see as big of a deeper bear move like we did yesterday. At all. I would like to see the market calm down a bit. However, we are sitting right on that, like I said, that 1775 area. So I do want to be a little bit more careful here in my positioning. But especially north of this, I don't really want to consider bull positions. Unless I'm like timing the bottom to get a reversal, something like that, right? But in general, I want to be more leaning on the bear side of things and also leaning risk off in general. Because that's the type of environment that's going to favor this kind of volatility that we're seeing right now. Also of note, VVIX is trading at 96. So the volatility of volatility is also decreasing, or has decreased past yesterday, as we sit around the 1775 area at the moment. Let's see. Yeah, I'm going to keep an eye on this LOI here on SPY. I'm not necessarily going to take the short right away, but this is where I want to watch. Let me make sure we're not getting any news here, because it is 9:45. 9:45 and 10 o'clock are always the times you want to watch to see if any news comes out. Apparently, Tim Cook is to appear at the Apple announcement tonight. Interesting. SPY rejecting the 200 MA here. So if we float south of this 629 for about 5 to 7 minutes here, then I'm going to want to take a bear position on the market. You're making a lower high here for now as well. You're underneath. You're getting a decent rejection here of the 200 and the 50 MA. Look at this candle. Gnarly rejection here. Maybe I missed my opportunity there. But again, I don't want to lean bullish this market, at least as it stands right now. Now, if this level breaks and volatility sinks more than it is, then I feel a little bit better intraday leaning more bullish. IWM sitting more bearish. The Qs are very sideways, and your SPY is bearish with a bullish volatility. It's not a fun time to day trade in general, but if you are, like I said, more than likely leaning a bear position on a day trade in general, probably going to pay you a bit quicker than not. Spot, wow, Apple got all the way up to 210.16. Wowee. Those puts now are at 87, so I'm still underwater on those. I had a 132 fill on those, so we'll see how that works out. Sorry, just catching up on some other names here off screen. Okay, good. Alrighty. Let's see if anything's changed. I want to look around at our sectors here in a minute, but I want to keep an eye on SPY because I could get a nice short opportunity here. Like I said, probably around 950 to 953 if we're still sub this level. That's where I want to consider a bear position, especially if the VIX stays a little bit more elevated. We're finding a little bit of a base here at 1765. UVXY is basically at the open here. Apple's just been riding up on the AEMA. Now kind of had a little tiny double top, tweezer top kind of pinch here. I'm going to wait and see how it reacts to getting a MACD flip here and see if we get a little bit of a sweep or not. I would just be very surprised on a continued move here. I mean, to be fair, you had 1, 2, 3, 4, 5, 6 days of red in a row. The only thing that throws that off from like looking at it from a probability standpoint is the fact that one of those days was an earnings, so obviously that throws everything out of whack in terms of technical expectations of having a continued trend one way over the other. All right, we're getting similar wiki price action up here like we saw here, so we'll see if the sellers can step in here. MACD starting to curl on the 1 minute, so we'll see if we get a harsh rejection or not. Okay, here's SPY right at this LOI here. Gonna want to watch this very closely because if there is a bear position on the market, this is where the opportunity lies today. So I'm going to be very patient, not taking it yet. You're making a new high in the day, so you don't necessarily want to front run that. More than likely what's going to happen, you're going to come up, back test this area or back test the 200 MA, the blue line on my chart, and float around there. That's the point in time you want to decide if you want to go short or not. So just shorting it right here is not going to be very clean, in my opinion. You have pre-market high here at, oh no, it's all the way up there. But this localized pre-market high around 629.87, so an area that we rejected more when the market was more liquid in the pre-market here. Looking like a decent rejection so far. Here's that back test I just talked about, so we're tapping the 200 MA. So now what I want to see here, ideally, is consolidation between the 200 MA, so this blue line on my chart, and this LOI here at 629.47. So if we can bounce in between here for, like I said, a few minutes, 952, 955-ish, kind of sitting in this range here, that's going to be the opportunity where I want to look for a short. Could just break it and fall back down and I miss it, but I want a higher probability trade. And that's where the advantage would be. But it's looking like you're getting a little bit of a yoink here earlier on. Q's made a new high in that push. IWM grinding lower, looking like it's going to make another low here on IWM. Yep, missed it. Decent little yoink there on the market. About just shy of $1. Apple still chilling at the highs. Let's see how our other Mag 7 names are looking. Nvidia kind of a double top on the day so far, looking like it will pull back here. Meta not looking too impressive. Microsoft continuously grinding to the downside. Man, if I... it's like you just bought puts on Microsoft, you probably get paid every day so far. Exception of that one green day. Google pretty flat, sitting on that 0.786 retracement. Not really going too much of anywhere. Really. Okay, there's Apple testing the AEMA once again. Let's see, you're building up a nice little volume shelf up here. So again, potential distribution up here, just like it was here. So we'll see if this is a base before another continuation or a reversion back to the downside. Tesla actually showing a decent amount of strength today. Opened up around 307, grinded up about 8 points, pretty good. Amazon dead in the water, not really too much going on there. Well, looks like I missed my short op on the market. Keep an eye on the VIX here. VIX is at 1770. IWM breaking lower. Q's starting to get heavy here. Come on, Apple. I'm planning on you not being Atlas. I'm planning on you not putting the whole world on your shoulders. Yeah, Microsoft is not helping at all. I need Microsoft to drop like 50 points by next Friday for me to make any money on that spread I have open. It's got to die on a vine very quickly. It's got to lose like 10% of value, which is crazy. Anything's possible. Okay, looking like we got a little bit of a red boy here on Apple. Watch your green SAR here. MACD is starting to flip over on the 1 minute here. So if the bears want to attack, they're going to try, and you're going to try to see the bulls step in right around like this 208.97 area. So that's where that old resistance was, where those wicks are. That's where you're going to want to see if the bulls step in to bounce it. If they don't, like I said, you're going to back test this POC, then 207.68, 207.5, and 207.5 breaks, you're going back to open. So we will see those contracts right now at 85 cents. SPY may be one that you don't want to touch today. If we get stabbed in this range here, because right now on the day we're talking, what is that? 629, a $1.40 in range. Very, very, very tight range day so far on the overall market. Q's not faring much better, and really IWM not really faring much better. So very tight range day thus far. On all three indexes as it sits. I do want to pop back over to our sectors, see if anything's changed here. XLU getting a little bit of a recovery here on your utilities. Energy, again, still pretty flat from the open, but holding its gap for now, looking to push. Consumer staples rallying. So this is interesting to note that your tech, so your XOK, lower high, potential another lower high here. So your tech is potentially eking its way down, while staples are getting a rally, energy is trying to push, and utilities are getting a reversal. So this could be indicative of some potential weakness coming into the market today. XLRE, so our real estate still flat. Materials grindy to the downside. Industrial is trying to find a bid here. Healthcare bad, almost down 1%. Big down day on healthcare right now. Banks pretty flat. And consumer discretionary pushing to the upside again. Tesla is having a good day so far. If Amazon reverses, expect your XLY to get even more bullish as well. Oh, tech broke that high, so maybe they are trying to get out of the woods here. New high on SPY on the intraday chart. Broke the red SAR here on the 1 minute as well. This is very wicky. Like, this is very spready for such a tight range. This is very spready. Let's zoom out a little bit. Let's see if we can get a better picture here. Yeah, look at these 5 minute candles. Gross. 631. Where do we tap up here? So pre-market high is 631.30. You have this LOI up here at 631.54. I would, like I said, watch this, basically this lower pre-market high, so this localized high area, right around 629.88. So about 20-30 cents higher here, which we're almost at right now. If we reject there, then you're more than likely going to pull to the downside here on the market. If we push here, which we're trying to get a little bit of a push here, That'd be a good sign for the bulls. I actually might take a short stab here. It's ballsy. I'm feeling ballsy today. I'll go 1 DTE on it though. I might miss my entry, but let's see. As long as we're sub 629 to 88, it's looking good. All right, let's look at the 629s for tomorrow. Okay. All right, I'm long the 629s for tomorrow at $2. I'll put those on the screen too. So basically, as long as we're remaining sub 629.88, it's pretty solid risk. And I added that up there as well. So still underwater on those Apple puts for now. Basically what I'm looking for here, again, staying sub 629.88, staying under that level ideally. This is getting, bulls are going to try to flip it here pretty hard. Ooh, this might be, timing might be great on this, I don't know. News just came through that says Trump to impose an additional 25 tariff on goods from India. Let's see if the market reacts to that. Market doesn't really care about tariff news that much, or it's cared less about tariff news. So let's see if we care today about tariff news. Now we're on this LOI here, so we'll see as we react here. You have your short-term EMAs trying to cross our long-term on the 1 minute here, and our volatility still in that spitting distance of 1775. Now is under that, but breaking above that, which you could get a harsh reversal here momentarily. There we go. All right, 5% on those puts. Should really put this here. Sorry, give me 1 second, guys. Reorganizing my computer screen. There we go. Better. Nice rejection here on the SPY. Not too shabby. All right, I'm going to take a few off in a second here. All right, let's take a few off here. It's roughly about a 9% gain, 10% gain, something like that. Filled between 218 and 220. You're backtesting VWAP, so everyone's going to be watching that, but you're losing momentum here, so your RSI is getting weaker, your MACD is starting to curl over. And that VIX, it's not there yet, but it's starting to get there. So like I said, the opportunity here, the better risk to reward trade here is for the bears. This can change though, especially if we break that high, that changes everything. But in terms of risk to reward, the longer we float under that level at this point in time, the higher probability of a bear move. So we will see what happens here. Back to entry after that trim. Take a peek at Apple, see where we're at there. Apple, again, wiki. Looking a little wiki. Did just break the green star on the 1 minute, so expect some level of contrition here. We don't know how much, we'll see. You guys know my levels I'm watching here on Apple, so be patient on that one. We'll see how that works out. Again, those are Friday contracts, so you could be a little bit more patient on those versus a 0 DTE or a 1 DTE where you have to be a little bit more aggressive. Just the nice thing about trading longer term contracts, you can give yourself a little bit more rope, a little bit more leeway with your trade in general. Back to VWAP here on the SPY and right around my first trim target here. There you go, now superseding my target. So now watch your green star to break and low a data break, and let's watch 627.86, that low LOI, as my next price target here on the market. If this bumps to like 240 before then, I'll probably take some more off though, just to de-risk. Or realize gains rather, right? Definitely watch green star break here though. MACD starting to flip. You're losing momentum here. The 5 minute never really got out of the gate, to be honest with you. It's pretty flat, but it never really went bullish, bearish. It's pretty flat. Sasha says, hey Sasha. Thanks for stopping by. You're on the POC and the 200 MA here on the market. So expect bulls, if they're going to step in here, expect some level of a push here, of like a defensive move here, right? Some little bit of a battleground here. And actually, if we just take the average of the high and the low, which would make logical sense, it's going to be somewhere around this general area. So you do have, again, as I like to call it, a bit of a sandwich. So we're getting a little bit of a sandwich price action here in this little spot. But ultimately, things are continuously leaning more bearish, again, as long as we're staying sub 629.88 on the SPY. We more than likely are going to push to the downside. Now, so far what the bulls have going for them, again, looking through both lenses here, higher low, higher low, higher low, could keep that together, and you made a higher high and technically another higher high. So you're getting really tight here again. That's what the bulls have going for them. What the bears have going for them is the longer price stays under that 629.88, you're showing weakness continuously, where you're not getting out of guard here, you're not pushing here enough, and that will result in a sell-off to the downside more than likely, especially if volatility can find its footing north of that 1775. And it looks like Qs are staying to try to be the strength on the day here. Oh, look at NVIDIA. There you go. NVIDIA got a little bit of pop there. Meta's trying to reverse. Microsoft says, leave me alone. I'm in the corner eating glue. Don't bother me. Google grinding to the downside. Apple just kind of fluttering along here. So there's an argument both ways here. Anytime you see consolidation after a hard push, that could be a cool off before another leg up. It could also be, depending on volume, a cool off or a losing of momentum before drawing to the downside. So it really depends on how you're looking at it and what volume looks like. Honestly, it could see an argument both ways. And how's this moving? Volume's decreasing as we stay up here. You get a lot of wicks forming just looking at the candles and looking at the volume. However, if the bears don't sink it here sooner than later, that would favor the bulls in general to push even higher. Whoop. All right, market got a little burp up there. Another wick made a higher high technically. This looks so scary on the 1 minute just because of how much, how tight price has been today. Like, that's not realistically a massive move. That just looks like a huge candle, when in reality that is, man, it's a decent candle actually. What's the low on that? 30. Wait, what? Low. That's a 70-cent candle. But another failed opportunity by the bulls. Now, it did make another higher high, so that's good. But again, 629.88, wicked and closed below, wicked and closed below. You're sitting near it, so we can fail here still. But we will see. It is iffy for sure. Tapping it, if we leave another wick here, it's more than likely going to reject. 629.85, 20 seconds left on this 1 minute candle. 80, 81. Good volume on that last candle too, by the way. But that also can be indicative of more liquidation when you have a high volume candle like that, leaving a wick behind like that underneath what I'm calling a Q level intraday, right? Looking at intraday trading, that can be indicative of more liquidation. All right, this candle did close sub 629.88. So if we get another, if this candle turns red, then you're going to yoink back down to here again, and then we're going to find out if we put in another lower high. If we put in another low or higher low, then I'll probably close out my SPY puts just to de-risk, because at that point you're making continued higher highs, you're testing this key area, and bears are having a hard time pushing its head underwater. So just keeping it real with you guys, that's more than likely what I'll end up doing if we can't substantiate underneath that level. Another little tiny little push here. Who's doing it? Let's see. Not Tesla, not Apple. Amazon's getting a little bit of a rally. Google got a little bit of a bump. Not Microsoft. Meta got a little bit of a bump. Yeah, it might just be all NVIDIA right now. Which is interesting to say. 178.26. Oh, it's over yesterday's close, so that's good for NVIDIA. Yesterday's high is 180.26. And you're right, actually, you're right near yesterday's open on NVIDIA. That's an interesting spot. Let's see. Yeah, the Qs are trying to grind. I just don't trust the grindy price action. Those SPY puts are now at they're now at 160. Those Apple puts so far are getting smoked at the moment. Apple just made another high. So this could be a point where I want to close these out. I don't buy it. I'm sorry. I really don't. What's that? 787. I don't buy it. I don't buy it. Sometimes I just get a gut feeling, and I'm trying to follow my gut on this one. I got a gut feeling. VIX is back at the lows, though, to be fair, and UVXY is sold off so far. So there is a possibility that the bulls are going to keep it together on the day. I'm liking this move here from a bull perspective on the SPY. It just feels like we're waiting for the elevator down. The other day in our community over Exclusive Trading, I took a trade. It was a bear trade and it was underwater for a little while. And I was saying this is going to be one of the scenarios where you see the staircase up and then eventually the elevator down. And that's when we just slowly push up, and then you just get like a quick yoink to the downside. So that's looking like what we might get here. That's what I'm theorizing based on how everything looks. Especially with NVIDIA sitting where it is, it should pull back to at least here. So we'll see how the market reacts on that. Yeah, I'm not buying Apple staying bullish up here. I'm not. I will wait with patience and fervorance. We will see. Let's see if we got anything else going on around the market right now. White House executive order addressing threats to the United States by the government of the Russian Federation. Okay. Anything else? Not much. Yeah, not much going on. Pretty quiet, honestly. All things considered. Also, to be fair, so a little something to learn here. If I really, if I wanted to close out, if I was convinced that, my Apple trade was actually dead, or if my SPY trade, I was, all right, de-risking, I'm ready to get out of it. If I have time in this case, or I'm near the money, which I am in both, I don't want to sell as we're pushing higher. I want to wait for some level of a pullback or something, so that way I take a smaller loss if I do end up taking a loss. Don't necessarily want to rush out all the time. For example, if I wanted to take a loss, I'd exit around the AEMA tap to get out of the way. But again, I'm sitting in the neighborhood that I'm still pretty confident we're going to pull down here. And I'm not really buying this breakout. Excuse me, guys. My dog is crying, and I need to let him outside. I don't know if you guys can hear that, but he literally will go behind me and just go, and just make little howling noises to go outside. So I don't know if the mic picks that up, but he does it until he gets annoying. So he ended up getting annoying. So he got to go outside. Anyway, let me check something here on volatility. So let's see where volatility actually moves into decay. The way volatility is sitting right now, looking like the inverse of yesterday, actually, which isn't good for me short term. So remember yesterday we saw volatility break and climb up, and conversely the market came down. The way that it's sitting right now is looking like volatility And this actually might be where it's starting to crest here. Maybe a little lower. I don't think we're getting 1653, but volatility selling off, rounding out, and coming up to the upside. So basically the exact opposite of yesterday is looking like what we actually might get here on volatility. Yeah, that's looking likely. So basically like the opposite of yesterday's candle here. If you're looking at UVXY, for example, looking like a wick down here and close above probably 17 or 16, at least as it stands right now. That can change, but as it stands right now, that's looking like what we're actually going to see here. Okay, so now if I wanted to take a loss on my SPY puts, I would exit here. However, I don't, because I think I still have more money on the table here, and I'm going to remain patient. But as you see with this whole trade, I talked you through what the bull things to watch and what the bear things were to watch, and the bulls were still putting up a decent fight, all things considered. And remember that 629.88 area is essentially the area I'm watching that's really important intraday. Now you broke above it. You're only about 50 cents above it right now on this back test here. So it's still not out of the woods here by any means. This just looks way more scary also because it's the 1 minute chart. And I do contemplate not looking at the 1 minute chart when I'm on stream because I know a lot of people can't handle looking at the 1 minute chart. Like it's overwhelming. And some people really don't want to look at here's the 5 second chart. You want to stare at something funky. Or you probably go down to 1 second on this, right? Yeah, there you go. Watch this. You want to talk about like smoking crack and trading, you're going to watch the 1 second chart. That will not be a fun time. You'll get scared and see candles like that. Anyway, I like looking at the 1 minute chart because I've essentially trained myself to take all the information, not overreact to it, and think of it in more of a longer term time frame. Most people should probably look at the 5 minute chart. And the way I structure a trade is I look at mostly the 1, the 5, and then I have an idea of where we're sitting if we're looking at a day trade on the daily, the weekly, and the monthly. Especially if I'm playing the indexes, I need to be conscientious of where volatility is sitting, where I think volatility will go, because that will obviously have a strong effect on the market. For that reason, I'm still not closing out my puts. I will make more money on those puts. I'm not going to. So here's another important distinction. Because they're cheaper now, that doesn't mean I want to add more money to them, right? It was okay with my risk. If I say I'm risking $100 for a trade, I risk $100 for a trade. If I'm risking $1,000, $10,000, $20,000, $100,000 a trade, however much I'm risking, that's how much I'm risking. So just because things get cheaper or whatever doesn't mean I buy more. Equity is a different story. But as it pertains to options, I have a set risk. I keep that risk. That's it. Now, unless part of the strategy is to scale in, where I say, okay, if I'm willing to risk 50K and I go half size and I go 25K, and then maybe I do another quarter size and I do 13K and then the other quarter to make my 50K total exposure. So there's many ways you can structure a trade. Me personally, I will purposely say if I scale in, because scaling in essentially would give you the opportunity where I think there could be. In this case, I was a little wrong in saying I didn't really think we'd get this much of a thrust up on the SPY, and I'll be the first to say it, but I was still acknowledging the bull opportunity here. But saying you get that upside move here, I could have went half size and scaled in as we start to look weaker. I didn't. It's fine. But I'm just saying there's many ways you could structure a trade. Eddie drops the "I'm not leaving" in the chat. Yep, those SPY puts are about at cost now. They're at $1.80. Again, my average is, I think I have $2 flat, right? Hold on, double check my doo-ba-doo-ba-doo. Yeah, $2 flat on those. So pretty close to cost. Those Apple puts are trading 60 cents right now. Their bulls are defending the EMA. Got to give it to them on Apple. So far, they're doing a really good job. Will it hold? To be seen. I am of the crowd to say no, but I'm not putting more money in it. Is what it is. If I walk away with a 10% gain or a 30% loss, it is what it is. Follow the trade plan. The trade plan is this move gets given back 207.5 breaks and we go back to basically open. That's the trade plan on Apple. Long story short. Back testing the LOI here. So this is now in a very, very, very important area. So sub 62988. That's like our intraday trigger, right? It's an important area looking at price action pre-market. Now we've got the 50 MA, the 200 MA, VWAP, POC, all clustered around 629.33 plus that's 629.47 LOI. So basically this little tight range here of a few cents, 10, 20 cents or whatever, is going to be a very, 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 very key support for the bulls here if they're going to substantiate a bouncing or a continued bull move. If this move fails, especially if it fails with a harder candle on higher volume, especially if it fails with a VIX pop, pushing it over 1775, you're going to break low a day, you're going to break this level, you're going to sell off. Like, you will. You will. It's not if, maybe, it's going to happen. And there's very few times I speak in definitives on this program, but you'll know every time I say something definitively, I don't think a single time actually that I've been live where I've said something definitively, if this then this, it's missed. If this area breaks with high volume especially, and if it breaks with a volatility spot pop, which now we're getting a little bit of a break or a test here, if these two things coincide, you will break 627.86. It will happen. We'll see though. Volatility is not getting as strong of a markup though on this little bit of a retrace here. So we'll see. Beastwood says, thank you for your analysis, brother. Always much appreciated. You're very welcome, Beastwood. Happy to be here, my friend. Hopefully we'll see you back in the community one day. When you're ready, we're around. Until then, you hang out here and we'll make some jokes and trade some charts. We'll have a good time still. Amazon's starting to get a little bit of a reject here. Tesla making lower highs, so watch that. Again, I'm not really trading Tesla. I'm not interested in it. Bulls are going to want to catch it around here. High 313s. Apple is grindy. Google grinding lower. Microsoft, again, just huffing all the paint in the corner of the room. It's got a gallon paint can. Its head is in it, and is just inhaling the fumes because it is just it's just totally just not following the trend here. Meta, decent sell-off here off of the market highs, I should say. Breaking low a day here. Remember what I said at market open, as long as Meta's sub 775 to 770, it's a little spready. 770 to 777, I'll say. So a nice $7 range. Under that range, you're more than likely going to fill this gap. Not right away, right? Don't take my words that literally, but it will happen more than likely than a bear or a bull side move. Nvidia rejecting, what was that? Yesterday's close or yesterday's open? Yesterday's open. A little bit of an early rejection, about 20 cents off, but rejecting yesterday's open. Moving to the downside here. All right, we're in this key spot here. MACD is getting a little overblown here on the downside move. Those puts are basically flat, about 190, so a little under on those. This is also something to watch. So on the 5-minute. So here's everything you need to know about the SPY because it's trading in such a tight, kind of a crap range today. 629.88. Under that, the market's bearish. In general, it's bearish. This is a tight area of support, though. Basically, I mean, you want to treat it down to here, you can, but we'll call it 629.32 to this LOI at 629.47. Now, on the break of this low here, on the 5-minute chart, you're going to want to watch the SAR, which right now is at, we'll call it 629 even for simplicity. And then the 200 MA, which could catch things at 628.98. So if you want to be super simple, let's keep things nice and simple for you guys. The market goes definitively bearish on the break of the 10.05 candle, which is here. We'll call it 10.01 because that's the low of that candle. So here, I'll put a nice red line. Make it red. And then, just so I will delete it later, I'll make it annoying. There you go, big ass red line. Getting under that, market goes definitively bearish. Like definitively, because then you're bearish on the 1-minute and you're bearish on the 5-minute. So you're going to be trending down on all fronts. You'd be under every single EMA and MA on the 1 through 5-minute chart. So there would be a definitive bear trend at that point. Plus your MACD would more than likely flip bearish here on the 5-minute as well. So this is the level you could probably hit a 0 DTE on this break, which is something I will personally look for if I'm live on the program when it happens, if it happens. On this break here, you could consider a 0 day. Just be careful because it could break quickly and then you're going to overpay on the buy side, so you want to just keep that in the back of your mind. You could consider a 0 day here as well, but the whole reason I chose a 1 DTE is because price action's so choppy today. So notice yesterday when we did a stream, we did a 0 DTE mainly because I was expecting a sharper, quicker reaction, mainly due to where volatility was sitting. Today, volatility is decayed a little bit so far, and price action, conversely, is tighter, right? All things considered, price action is much tighter than yesterday. So with a 0 DTE, I'm risking that theta piece of the equation, right? I need to make sure that the move is quick for me to make money. If the move's not quick, I don't make money. Okay, you're starting to move here. You did break the SAR on the 5, but you're not under the 200 yet. Basically, this is a little bit of an overstatement. It's a little lower than it should be, but it's like that way to give you more confirmation, essentially. You could consider a 0 day here. You are a little oversold on the, and I hate saying oversold. It's not oversold, but you're a little too bearish on the 1 minute. So here's my plan. We either break this and I consider a 0 day, or we come back up a little bit and back test this 629.30-ish area, which would need to be in a period of 5 to 10 minutes. So I need a longer period of chopping down here, back test it, and then I'd look at a 0 day, and I'd probably go like 1 strike out the money if I did strike on a 0 day there. Otherwise, this could just get heavy here because the 5 minute did break. And if the 5 minute sinks at 200, this could get heavy very quickly. So even though we're heavily red on the MACD here, on the 1 minute, you're seeing increasing volume in the last 2 candles. We could just get a flush pretty quickly. Those SPY puts are green once again, trading at 215. Let's check on Apple. Basically watch this general area here. This high 209s. We will see how that works out. Also, conversely, or not conversely, in addition to, look at your Mag 7 right now. Tesla's doing a decent job holding up things, but outside of Tesla, it's just Apple. And if Apple sees bearishness, big fart noise for the stock market. Just saying. Big old fart noise. I need a, hold on, let's hit the, this is more appropriate. There you go. All right, we're near that big old red line level. If you miss that 10% on those SPY 1 DTEs, you're there. All right, we're breaking it. We're testing it. We're tapping it. Tappy, tappy, tap. There we go. As the kids say, damn, it feels good to be a gangster. We're going to trim some here. Let's see. All right, took some off for 21%. Now, if we backtest this red area, you could also consider a 0. I may not just take a 0 and I'll just ride the 1 DTE because I am underwater on my Apple, so I want to balance my options here. Look, VIX is expanding. We're not there yet, but we're almost near that 1775. And I told you what would happen if we hit 1775 on this break. You're at least tapping this level. At least. Bare minimum. Take another trim here. 30%. Next trim is going to be runners, just so you're aware of my sizing. That's typically how I break it up. I like to go, a lot of the time, I'll get the meat of my trade 10, 20, 30, and sometimes like 40, 50, depending on how quick it moves, right? And also time exposure. If it's 0 DTE, obviously that changes things. But I like to get the meat of my trade between 10 and like 30%, because compounding those gains that quickly over and over and over again, that's how you really make longer term money. And I can take that money and move it to other investments, stocks, etc. So I prefer to lock in those gains when they come, even if we haven't hit my trade target yet, which is this target. This is basically where I go, okay, I'm pretty happy. I can go runners here. So even if we don't necessarily hit my target, I like to substantiate as many gains as I can because I'm de-risking, right? I'm taking money off the table. I'm taking risk off the table. Especially when volatility is higher, I want to have a lower risk exposure to the overall market, right? So I want to make my money and get the hell out of the way. This week so far, just so you guys know, I've made a total of, and I should say I've alerted, just to be fair, because I make other trades, but I've alerted 1, 2, 3, 4, 5, 6, 7, 8 trades so far, all of which have been winners with the exception of Apple so far. So far, it's not closed yet. So every single trade has been a winner, but also I'm focusing on quality, and I'm not gloating. I'm trying to make a point of saying I'm focusing on making fewer trades that follow a specific set of criteria to achieve a goal. That's what I'm doing here, and that's how you survive this environment. As I said very specifically with that very important once in a multi-year time frame trade that's coming up for SPY, or could come up, or at least I believe is coming up, you don't want to be on the sidelines. You want to blow all your money. You don't want to make a stupid mistake and not be able to take advantage of that, right? So this is the kind of time where you want to get your money, get in, get out. Make your small gains, whatever. And sometimes you guys know if you swing trade, maybe it takes forever to make 10, 20, 30%. If you can make, 10, 20, 30% in a matter of minutes, what are you doing? Why are you not taking it? Greed. It's ultimately the reason. Okay, so near term here, we did make a new low in SPY. You're kind of building a base here. We could back test the AEMA and my big old red line here. On that back test, if we consolidate, I will open up a 0 DTE short to hit my price target, go to runners on my 1 DTE, and probably go runner size on the 0 DTE. If we continue to reject down here, so we sit here for a matter of 3 minutes, you're probably going to see VIX break 1775, and conversely, with VIX breaking 1775, you're going to break 627.86. Apple's getting a little weak here. It's the first real inkling of weakness off of that 10-12 push here, that high day push, just kind of grinding down. If people get scared, if day traders flee, you could get a pretty stark red candle pretty quickly. So you're going to want to make sure you're keeping a watch on Apple today. Even if you're not in Apple puts or whatever you're doing, right? If you're watching the stock market today, the fact that this is up almost 4% is huge. Guys, look at this real quick. If you're not paying attention, pull up in the stream or whatever. NVIDIA, or just listen to me. NVIDIA's down 0.3. Meta's down 0.3. Microsoft down 0.4. Google down 0.4. Amazon up almost 4. It's 3.7%. Tesla's up 2. And Amazon's up 0.7%. If there is weakness on Apple, the market is going to eat a massive L. So if strength comes out of this move, and in my opinion, it still looks tired, and I'll be patient. If strength comes out of this move, even if it can't just substantiate a sideways grind all day, but if it has any inkling of weakness and people decide to abandon Apple pre this announcement after hours, you're gonna get a decent yoink on the market. I like saying yoink. You're gonna get a yoinkage. You're gonna hard fall on the market, and people are gonna go, well, what the hell happened? Why did the stock market drop? It will be all because of Apple, because everything else is trending more bearish. Your bigger Mag 7 names are all trending bearish. They're all slightly moving down, right? That will be your decision maker ultimately. Is Apple failing? Now, so far it back tested. That was its first test of the 50 MA and it bounced. If it continues to test that 50 MA, that is where you want to start to be concerned. So every time you hit a resistance or support level and you tap it 3, 4, 5 times over and over and over, think of it like you're punching a wall made of ice. And as you punch the wall made of ice, it slowly cracks and breaks bit by bit by bit, and eventually you punch through it, right? That's what happens with support and resistance levels, especially on a trend, as it taps over and over and over and over. Eventually the support will give and it will fall. Same thing with resistance. The resistance will break in the same regard, right? That's what you want to keep an eye on. Okay, now I'm going to look here for a 0 day, potentially. I'm going to let this MACD flip over, ideally, here on the 1 minute. So we'll let some cool off. Maybe let it come up a little bit above this line. Then I'll shop for a 0 day. What I'll do, actually, we're at 628. I'll pull it up on this, I'll put it in the watch list here so you guys can see. What are we pricing them at right now? All right, 628 put right now is 84 cents. IV is at 18. IV percentile is 17.5. So a little bit of a premium, but not bad. I'm debating if I want to go 627s. I'll keep it. I'll keep an eye on the 627s, but I'm not going to feel pressured to take them because I already have the 1 DTE, so I'm not necessarily going to rush it, but we're going to keep an eye on them. Oh, real quick, do you guys see Match? Remember we talked about Match on the program? Decent earnings, up 13%. First spoke about Match somewhere around here, 30.72. Now all the way up at 38.18. Not bad. Not too shabby. All right, back to the market. Here we go. Yeah, so I'm going to want to see this MACD flip a little bit. It may not happen, but I want to see that MACD flip a little bit. Now the 200 MA is going to become resistance as well. So if we hover here for a few minutes, that's where a 0 DTE looks more favorable. The only thing I will say is because this price action is so tight today, a 0 DTE I want to be mega aggressive on. Meaning I want to trim out very quickly at 10, 20, 30% if I get the move, because price action is very tight, and we already saw IV is at, what is that? It's at 19 for this contract. IV percentile is at 17.5. So IV is actually a little bit elevated. So I would be, from an IV standpoint, overpaying for these puts. So I want to be aggressive when I take profit if I do enter a 0 DTE on the market here. I want to be very, very aggressive on that exit. Apple basically double topping on the day thus far. See how everyone else is doing. Come on, Microsoft. I need you to lose about like 50 more points. Nvidia not looking too hot. It's not bad, but if you lose this low here, so for those of you trading Nvidia, you lose this low, basically 177.50, you could get a little bit of a liquidity sweep, at least a low a day. And that's $1.50 real quick. Okay, now we've been hovering around here. I think I'm going to take a stab on it. I'm looking at the 627 zeros. All right, I'm long the 627 zeros at 62. Missed a potential exit because I was busy typing, but hey. Those are now sitting around 64 cents. Ideally, I want to take my first trim somewhere north of 73-ish cents, probably. Let's see. Yeah, actually 73 is a POC on the contract, so that's funny. So I want to look at around 73 as my first point. I want to trim some out of that. So we did hover around. We left 3 wicks above my big old red line here. The MACD's starting to curl up on the 1 minute. It hasn't really flipped over yet, which isn't necessarily a good or a bad thing. Just showing that we're consolidating near the lows here. So we're going to see a decision be made very, very, very soon. Apple has now double topped, basically triple topped if you're looking at 1 minute candles here on the day. This is getting really, really tight. So now you have your EMAs pushing it up and pinching it with a flat top here. Basically at the high, 211.15. If 211.15 breaks, you could actually get another push on Apple, believe it or not. However, if it fails, that's going to be a big mark, not a great mark for the bulls here. As a bull, I would have preferred it to have a wider range and kind of just bounce around a little bit if I was a bull. Because now you're in a very risky part of town here, risky territory for Apple. Wayne says, really enjoyed listening to your thought process. Very insightful, Buffalo. Well, thank you for the nice comment, Wayne. I don't understand the Buffalo point, but thank you for the kind words. Buffalo, you too. Unless you think I'm like a sage individual, so like sage, like the buffalo. Something like that, maybe. Guys, do me a quick favor. It's 10:35. We're going to go a little bit long today. So if you haven't already and you're enjoying the stream, especially if you're on YouTube, hit the like button real quick. Follow me if you haven't. Subscribe if you're not, because once we hit 500 subscribers, this will become an everyday show. So if you're not on YouTube, go check out my YouTube channel, hit the subscribe button, and we'll do this every single day for the most part, with the exception of holidays, because obviously the market's closed. But most days we'll do a show every single day. So if you like the content here, do me a favor and hit subscribe over on YouTube, and follow me on all my social medias if you want to be kept in the loop about what's going on with the community. Thank you. All right, we're getting a little bit of a move above my red doom line. You're basically sitting on your POC and your 200 MA on the 5 minute here on the start of this candle. I'm going to go ahead and guess without looking that Apple broke that level. Did it? Oh, it's at it. It is at it. All right, it's going to try to break it. Let's see. Will it leave a wick or not? Those SPY puts are now, the 0 DTs are a little under. They're at 4.5. I'm not going to give them much more rope here. On the 0 days specifically. The 1 DTs are fine, they're still at entry. But this is not a super fun day to day trade, as this price range has been very, very tight. Alright. I'm going to take the L on the zeros, I think. Yeah. Taking the L on the zeros. Womp womp. Was good risk. Jinxed myself by saying I didn't have any losses this week so far. That happens. What you gonna do, brother? Good calculated risk. I can't be mad about that. All right, so the 627s are dead. Still going to ride the 1 DTE. And the way that I structured it, I wasn't too heavy in the zeros. So it would be nice to make up the loss, essentially, with the 1 DTE, especially if we break the 627.86. Oh, Wayne, you're in seat decree. Well, right on, brother. Thanks for coming to hang out. All right, Apple did break the high, but again, not with a lot of gusto. Good volume. So let's look at things again. Even when I'm wrong, we want to look at things from an unbiased point of view, and I get an idea of what could have went wrong, what went right, etc. Broke it with good volume, but not really getting a lot of follow through. Again, if these short-term EMAs fail, especially if that 50 MA taps and fails, you're going to get a little bit of a spook here on Apple. And these puts, they're down. They're down pretty good, right? They're not looking too great. But these can attain value very quickly and not necessarily be completely fried trade the way that this is sitting up. This is a crazy, crazy move, to be fair, on the daily chart. On rumors. What do they say? Buy the rumor, sell the news. Like, this is just too much. This move coupled with the SPY not moving, I call bullshit. I don't trust it. I don't trust any of it. Let me put it like this. If you are a bull, and again, I like to phrase things from a risk standpoint, especially on this program, so it's not necessarily bullish or bearish, it's risk on versus risk off. I would be I like to say a cautious bull here. I'd be risk off and be very cautious as a bull. That's just me. Like, I'm even looking at some of my equity and how it's performing, and I'm looking to rotate a few things. So even when I'm wrong on like a day trade or whatever, still always look at the market environment and be like, how do I feel about this, right? How does this look? And anytime we see one stock at the Mag 7 directionally outperforming the other Mag 7, now there's an argument to be made that people are selling their Nvidia and selling their Meta and selling their Microsoft, selling their Google to flow into Apple right now. True. And they could sell it and then these all go up. So there's an argument to be made there. It's just, I don't see it likely. I see this move getting back down. I actually see Apple leaving a decent wick on the day, and I think by the end of the day, Apple will close under 208. Could be wrong. You can clip that and laugh in my face later, but I don't see Apple substantiating this move by close. I don't. So I will be patient, and we'll see if I'm right. Yeah, this is a no trade day, really, on the market. This sucks. This kind of price action is like, you might as well watch paint dry. So I'm going to keep these 629 1DTEs open for now. If we backtest and move back down, which we probably will. If we don't get a continued follow through, meaning volatility doesn't pop and we don't tap my level, then I'm just going to close out and literally not do anything for the rest of the day. Like at all. We're right around that 629.88 area, which you're going to see a little bit of pop here and probably a back test because this move's too sharp. Unless you're scalping. You probably have a good time scalping today. Scalping the highs and scalping the lows. But unless you're scalping, you're probably not going to have a fantastic day-to-day trading. In terms of day trading, at least. Hell, look at me. Statistically, I am right. Hold on. Let me pull up my stats. 91.36% of the time. And I had a loss today. So they happen. Just a point of saying it would be a little bit harder to trade today. Or to call price action as accurately as you may normally call it, I guess I should say. Now, here's the important part. If when we actually get a substantiated move in either direction, that changes everything, right? Then you can play your system, play your strategy, whatever. But until then, this is very choppy price action. Volatility is so questionable here where it looks like it could. It's, again, within spitting distance. 50 cents on the VIX is nothing. I mean, it's something, don't get me wrong. But it's within spitting distance of this level. It's holding its lows so far. It's not an easy read day. Let me put it like that. I think I use the word clean in our Discord. I say it's not a clean day. That doesn't matter if you're bullish or bearish. Remember, risk standpoint. Remember what I said about NVIDIA right around here, that 177.50 area. That breaks, you're going to sweep for about $1.50. Meta making lower highs. I'm so salty about Microsoft. Might still work for me. We'll see. I'll give you guys the live update if it does, but we will see if that ends up working out. Google getting a little bit of a bump here. See about that. The other thing I'm noticing here is on these Apple puts, right? You're getting IV expansion, which is really good in my case, because even though I'm theoretically more wrong, right, it's still going up and I bet directionally down. The IV is expanding because back at 1037, here's a quick example for you guys. This is why I like options over trading futures. At 1037, so on this candle, Apple is trading at 211.19. So Apple actually increased, went up in price about 70 cents since then, and the contracts are the same price, or roughly the same price, give or take a penny here or there, right? So that's understanding IV. So before you trade in general, you have to understand your Greeks, you have to understand your IV. Now, to be fair, as you move more out the money, your implied volatility is more sensitive. It can go up a little bit more. So actually what would happen here in this scenario is in the event if Apple got for example, if Apple got a really sharp reversal, or even if Apple continues to steadily climb, either scenario more than likely would price in higher chance of an IV increase on the puts because more people are going to be buying puts, more people are looking at this saying it's overextended, whatever, right? But the IV is going to continue to get juiced and juiced and juiced and juiced. And probably on both sides of the chain, you're probably seeing getting IV juice on the call side as well. When this gets a reversal, especially if it's a sharper reversal, that IV will continue to climb. Now, in the event that it starts moving slowly back down, then you'd actually see IV decrease, not because of the fact that it's moving slowly, but more so because of the fact that you're moving closer to the money. Your IV starts to decrease a bit, but your delta increases. So things just move around with how the option is priced. That's why at this point, even though, again, I'm more wrong on Apple, The contracts are essentially holding, I mean, a 4-cent range down here. They're not really going anywhere, right? Even though it lost essentially $1, and on the delta right now, it's a delta. So here's your proof. Now you can get into the math and really, calculate this out. But you have a delta 14 on these contracts right now. So that means for every dollar that it moves, it would move 14 cents, right? Theoretically. Now you have to include gamma and vega and everything else. But if we're just looking at solely delta, theoretically, when these contracts are trading at 47 cents, and we're being conservative, they should have lost at least 10 to 12 cents at this current price here, and they only lost 4. And that's the power of IV. So, little lesson on IV with options and why it's different, and why sometimes you might be trading GameStop in the COVID era. I did this personally, fun story, and I bought far out the money puts just for kicks because, it was up and down crazy. And as GameStop actually went up, the IV on my puts were like, I don't know, it was like 500%. The IV on the puts actually went from 500 to like 1,000 or some like ridiculous number, right? And I actually ended up selling my puts for a profit, even though GameStop went up in price. And that's an extreme example, but that's a good example of showing you what you can do with options. Even when you're wrong, you can still make money on options with buying options like that, or even selling if you're just playing the IV decrease. So it's very important to understand IV if you're trading options and not think so linearly. I just mixed the word linear and literally. Linearly, or whatever I said. Replay that. Anyway, don't think so linearly. Is lineal? Yeah. Don't think in such a straight line when it pertains to options, because there's multiple things. You can't just simply think buy call price go up, buy put price go down, or buying put I want to see stock price go down, buying call I want to see stock price go up. It's a little bit more nuanced than that, even though that is basically the root of understanding options. All right, guys, this was a longer stream today. We went about 93 minutes, so I'm gonna wrap it here. We made a lower high on the market. This is the level to watch. This is your definitive bear level here, 628.81, and also that 629.88 area, which I don't have a line here, but 629.88 is your like intraday bear level. If you break the high with volume, the market more than likely will flip bullish. I'll be honest with you guys, I don't really trust this Apple chart at all. It's too much, it's too high, it's too quick on nothing. I could be totally wrong, right? But it is a little too much, a little too quickly on nothing. And the way that this is moving, this price action, if I could doodle on here, I would. But essentially, it gives me the feel whenever we see... Oh, can I do like a loose line? I can't. Whenever we... Damn it. Whenever we see essentially here, we'll do it like this. A slow, gradual climb like this after a nice move up, when it hits its crest, whenever that is, and it looks like it was going to hit that multiple times, it just didn't. The move down tends to be more like that. Not the same angle, the same way like that, but it tends to be more aggressive to the downside. So, kind of what I'm waiting for here. We'll see if it works out or not. Like I said, can't really lose too much more on these contracts, to be fair, so I'm basically at risk either way. And by risk, I mean the amount of money I'm willing to lose. It's kind of where I'm at here. I was really mentally pricing in like worst case scenario 40 cents, so 44 is fine with how far. I didn't really think it was going to go this high either, so might have been a little wrong here, but we'll find out later. You guys know what I'm watching for SPY, so keep an eye on that. Honestly, guys, if you didn't take a trade yet, in general, maybe don't trade at all. Or if you like my 1 DTE play, it's on sale at 160. Keep in mind I've already trimmed profit out of that, but I have a $2 average. It's at 160. If you like that, you could even put a stop at high a day. That's decent risk at this point. You could put a stop probably at like a $1.40. Yeah, look at that, $1.46 with the lows. Put a stop at 140 if you're on a really like tight risk play and you really want to trade something. That could work out for you pretty safely. Other than that, guys, enjoy the rest of your day. That's going to do it for me for this week. Next week, we'll have another program. sometime, some way, somehow we'll line them up. I'll probably end up doing Monday, Tuesday, Wednesday for a little bit. It seems like you guys have liked that. Maybe I'll put out a poll up over on my X. If you don't follow me on X, go follow me on X. Put a poll up there. You guys can let me know what time, what days of the week you prefer to do the show. That way we can come in and you guys can watch at your leisure, at least when you're available and you want to tune in. So, good stream today, good stream this week, good week overall. Kept things pretty safe. Again, I have one loss this week so far, and I'm pretty happy with that. Actually, it's right in line with my statistical performance. If I have a 91.36% accuracy and I made 10 trades, one of them was a loss, that makes sense. That is math. So, I'm right in line with how I should be. Can you guys hear that? I think you can. That is my dog howling randomly. I think he's probably telling me, "Dad, I want to come inside. I'm tired and I don't want to be outside anymore." Anyway, I'm gonna wrap it up. Gonna grab some lunch. Have a great day, guys. Make smart decisions. The rest of this week is gonna be a little iffy. You know what to watch on volatility. That's gonna stick for the rest of the week. So 1775 is a very important level. Over that, you want to be risk off. Under that, you can take a little bit more risk if you like, but just be very conscientious with how close you are, with it being 1713-ish like it is right now. Just be aware that that move could come pretty quickly, right? Anyway, I'm going to stop saying anyway. It's going to wrap it up for me because I've said that like 9 times now. So I'm just going to get into my little outro. And some say, well, you'll need an edge to trade. Well, I like to look at things from a different angle. And that's always what you'll get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you next week. Take care.
The time has passed, and that's a wrap.